a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi, everyone. Welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about silver ETFs. And you would recall that we talked about gold ETFs last week. So we are just continuing the conversation about precious metals. In fact, silver has been outshining gold of late. So I thought probably we should talk about silver ETFs too. So, as I had mentioned last time, too, the surge in precious metals is mainly due to investors' search for safer assets amid rising uncertainty for the global economy due to the health crisis. And these metals are also getting a boost from geopolitical uncertainty around the world and presidential election uncertainty in the US. And further, interest rates all over the world have plunged because of unprecedented fiscal and monetary stimulus launched by the governments and central banks. So, those low interest rates also boost the appeal of precious metals because these metals don't yield any income. And a weaker dollar has been declining over the past few weeks, and that hurts precious metals. They usually move inversely to the dollar. And talking about silver in particular, silver actually was underperforming gold for many years. But over the past few weeks, it has risen at a faster pace than gold. And silver is a safe haven asset, but additionally, it has many industrial uses too. So it is also an industrial metal. So it is used in everything from electronics to solar panels. And in fact, photovoltaic cells, they account for almost a fifth of silver's industrial demand. So reopening of factories in China helps silver a lot because China, as you know, is the world's biggest solar power market. And that is about demand. On the supply side, supply has been disrupted by coronavirus related shutdowns in case of silver, particularly in Peru and Mexico. So let's take a look at silver ETFs. But before that, I want to just mention that silver is more volatile and it is riskier compared to gold. Gold is a better safe haven asset. So that is why I usually recommend that gold should have about 5 to 7% allocation in the portfolio. That rationale doesn't apply to silver. Silver is probably more of a shorter term, investment, unlike gold. So let's take a look at the two ETFs that I'm highlighting today. And they're just two physically backed silver ETFs and physically backed precious metals. ETFs are the best way of investing in precious metals, in my view. So the first one I wanted to highlight is by iShares. It is the iShares Silver Trust ETF, ticker symbol SLV. It is the first and largest physically backed silver ETF, and it is actually backed by silver bars, which are held in London. Slightly pricier compared to gold ETFs, it charges 50 basis points, but is very popular with investors and has attracted a lot of assets in the past few weeks with silver surging, has about 13 billion in assets as of now. Now, this is very liquid, so it is better for traders, but if you want to hold silver for a slightly longer term, there is a cheaper alternative available. It is by Aberdeen. It is the Aberdeen Standard Physical Silver Shares ETF, ticker symbol SIVR. It is the cheapest physically backed silver ETF. These bars are also held in London vaults. It has an expense ratio of 30 basis points, and pretty decent asset size, about 664 million, but not as liquid as SLV. So keep that in mind. And on the last slide, I have the comparative performance of gold and silver versus the S&P 500 year to date. So you will see that silver is up about 37%, 38% this year. Gold is up about 27%, and S&P 500 is almost flat for the year. And in case of silver, most of the surge has come in the past few weeks. Thanks for watching, and make sure to check out zacks.com/promo for an interesting offer, and I'll see you next week.